Hey, um, when it comes to stocks, most of the people will ask what stock to buy. This is the most common and the most concerned questions that most people have in stock investments. But I want to tell you that this is not the top priority in stock investment, and it never do. Simply because the same stocks, there are people who make money and there are people who don't. So what is different? Since you're buying the same stock, why you're not getting the same result? So the question lies in how you do the investments. This is very important, and there are many factors affecting the investments. One of it is the cash. You may think I have money in the pocket, or I do have some saving in the bank, so I have money to do investment, but that is not the case. You see, stock investments have very high correlations with the money that we have to do investments, and that will affect the result as well. So how we're going to do the investment is we categorize the money into four categories. The purpose is really to help us to reduce the risk of investing and increase the chance of winning in the stock markets. Now, let's look into the first category of money that I call it living expenses. Money for living expenses is the money that we use to pay the bills, food, and our commitments. It's ongoing. And these are the money that you never use for investments, because I don't want people who invested and hope that maybe the next day or next week the stock price go up and then they can sell and then they make money. That is what you're hoping, but in reality people have no control over the stock movement, the price movements, and this is the stocks investment features that you need to learn before you do any investments. So therefore, you don't use money from your living expenses to do stock investments, because by the time when you need money and if the stock is not performing, you will still have to sell it because you need money to pay for the bills. Therefore, this is not money for investments. Now, second category of money is money for emergency. Same thing. A lot of people may think that I get an insurance to cover for the medicals or accidents. Yes, that will do, but there are certain things that insurance don't pay, not cover. So that's why you have to spare some cash. Otherwise, you will have the same scenario, which things happen, you are very likely going to dig your hand into the investment, and that because that is a very liquid assets, so you can sell anytime. However, whether you can sell at the gain or at the loss is another question. So that's why whether if thing happen, you will not consider whether you're going to hold longer to maintain or not. It doesn't matter anymore because you want money fast, and therefore you have to sell as soon as possible, even though it's a loss. And that's why it affects your life and it affects your investment performance. And third category of stock of money is loan. We don't use, and it's not advisable to use money from the loan to do the stock investments. This is because loan repayment is guaranteed, and with the principal plus interest, this is another additional cost to you. So why would you want to borrow money where you have a consistent and fixed repayment, but on the other hand, you do not have a consistent returns for repayments? So therefore, if someone borrow money to do investments, the chances of them going into bankruptcy is very high, and you are actually taking additional risk for yourself. So no point. It doesn't matter how good the stock is or what kind of tips that you got. Don't use that methods to do investments, right? Because we have no control over the stock movement. Now, the final category of money is the investment capital, and this is the money that we can use for investment, and this money is different from the rest of the money because it have one unique criteria, that is holding power. Now, holding power is meaning the money that you set aside, and if you don't touch it for a long period of time, it will not affect your life, your living expenses and so forth. It doesn't affect you at all. So this is the money that you can use for investments, and this is going to increase your chance of winning, because during market downtime, which we don't know when it's up and when it's a downtime, and you can hold on to your stock investments, and you can sell it at leisure, at the price that you want, at the time that you want. This is a choice of you having a holding power. But if you don't have holding power, then you will sell the stock at pressure, not leisure. So that is a huge difference of different category of money, and how this going to affect your result is very, very prominent, right? And if you like my video, please share and comment, and of course in futures I will come out with more videos, and if you have any questions, leave it at the comments. I'll look into it. Thank you.